Welcome to the Real P&L Trading Show, where every week I show you my real accounts, each one tied to a specific trading system, so you can see exactly how each strategy performs in real time. I answer all your questions live, and I trade my safe wheel system right here on the live stream, so you can actually learn by watching me trade it. Now, real quick, let me clarify something, because I know we always have new people joining every week. So when you hear me talk about the safe wheel, the AMP 122, the PL5, the earnings edge, here's exactly how they all fit together. The safe wheel, this is for anyone who wants to understand what the AMP style strategy is in its simplest form, AMP meaning all market profits. And it shows you the core principles: be systematic, be hedged, and protect your capital. The AMP 122, the book, you can see the book behind me here. This teaches the actual framework behind all my systems. Always hedged, always non-directional, always rules-based. And this is the blueprint everything's built on, the all market profits framework. Now, then I have the PL5 or the PL5 Pro. This is the professional, fully developed version of that framework. It's the advanced rules-based system for traders with meaningful capital who want consistent risk-adjusted returns with lower drawdowns. And then I have my earnings edge. It follows the AMP framework, just applied in a faster, earnings-focused way that uses discounted options for controlled leverage. Okay, so let's go ahead and start here. I want to make sure my tech is working. You guys make sure that you can hear me. Oh, yes, sounds good. I appreciate that. You guys let me know that. So let's start with, be sure you post any questions that you have. Okay, so because sometimes I'll end the broadcast and there's questions flying in, and we're on a slight delay. So if you have any questions, post those now or earlier rather than later. Let's talk about my earnings edge. You can see my earnings edge account here. I traded Hood last week, closed that for $1,078 profit. So you can see all of my trades so far this year. You can see I'm up about $3,438. And I've got one loss, 3 wins, and this one's pretty much a break even, this Google. Let me show you that on the spreadsheet. Let's see what the net lick is. 28,669. So I'm going to put that in there. 28,669. 28,669. Let's put that in, and what is SPY trading? SPY is at 695.18. It's up significantly from the last time. Okay. So we can see I traded Hood, Robinhood, made 1,078. My last trade, I got 25 wins, 5 losses, 1 break even. I have an over 80% win rate. My average win is 1,092. Average loss, $611. And we can see in 2022 what happened. I went up 63%. Market was down 20. 2023, 17%. The market was up 24. 2024 underperformed there, minus 36%. The market was up 23%. That's when I knew I was looking to make a change. I made a change in 2025, up 321%. Market was up 16.5. And so far, year to date, the earnings edge, this is the beginning of the month. So this is just for January, basically, up 12.4%. The market's up about 1.94. So the market's up 2% year to date. And you can see overall, I'm up 473%. Market's up 46% since the beginning of 2022 when I started trading the system live in this account. So that is the earnings edge. Let's talk about the PL5 Pro. This is the larger account. Let's see, SPY is up $3 today. Okay, it was down when we opened. Well, let's go to this account here. 472,869. 472,869. Okay, so I'm up from last week. I started this account with 470 this year, so I'm up about 0.5% on the year. Now, I started this account on June 1st, 2025. And since then, the account's up about 16% towards the end of 2025, and then the market was up 16. So pretty much matched the market. And so far in 2026, I'm up a half percent. Market was up 2%, so underperforming just slightly. But of course, I'm taking less risk because my drawdowns are much lower. They're about half the drawdown. So on a risk-adjusted basis, I'm outperforming, and on a nominal basis, it's pretty even. That's PL5 Pro. Let's talk about the PL5 variant, the S&P 500 variant. I'm trading with Interactive Brokers. So I'm going to show you my Interactive Brokers net lick. I can't show you the whole thing, or it'll share my account number. 37,285 is the net lick. So that's up. 37,285. So with this, I started on July 16th, 2024, middle of 2024. So to the end of 2024, up 10.2%. Market was up about 4. And then in 2025, it did about 12%. Market was up 16.5. And so far, year to date, I'm up about 0.75%. And of course, the market's up about 2%. So overall, since July 16th, 2024, the system's up 24%. Market's up 21. So I'm outperforming. And on a risk-adjusted basis, they're pretty much the same. The drawdowns are going to be fairly equal. So it's a one-to-one basis. So I am outperforming here with this variant. All right, let's see how the safe wheel is doing. We'll get into more details about the safe wheel because I'll trade it later. Let me just see here. This should be the safe wheel account. 6276 is the net liquidation. 6276. So it's up from last week, looks like. Now, and so on the safe wheel, 2022 started with $5,000. You can see 2022 was up 21%. Market was down around 20. 2023, it was up 5%. Market was up 24. Underperformed there. 2024 minus 14. The market was up 23. Underperformed there. 2025 up 5%. Market was up 16.5. And in 2026, so far, the safe wheels, the shining star, up 8.5% compared to the market up only 2%. So the safe wheel is outperforming, vastly outperforming in 2026. And you can see the overall numbers from 2022 when I began the account, up 25%, market's up 46. But I do get about half the drawdown, so I have half the volatility. So on a risk-adjusted basis, I'm at around 51% versus 46. So I'm outperforming on a risk-adjusted basis just slightly. But remember, the most important thing about the safe wheel is that you learn the AMP, the All Market Profits Framework. It's the most simple form on how to learn how to trade the All Market Profits Framework. And if you're interested in the safe wheel, the full course, I have that available. There's a link in the description, and I used to sell it for $495. I've sold it many times for that, but right now it is free. So just hit the link in the description and you can get free access to the safe wheel course. All right. So let's talk about trading the safe wheel now. So let's see what my positions are. I'm in SoFi, and it looks like I got assigned 100 shares last week at $24.50, which means I want to try to sell a call. I want to get at least 25 cents minimal, and I want to get at least at the 24.50 strike or higher. But the first thing I want to do is check my hedges, make sure my hedges are in place. Though I do have my long call, paid $6 for that last week, so I have my long call. I'm good there. And then I have 3 questions about this put hedge to make sure that it is doing its job properly. Number 1, do I own 200 shares and has it paid off? Well, I don't own 200 shares, so it doesn't matter if it's paid off or not. So no. Number 2, is it under 100 days? No, that's good. And also number 3, is this strike price within 70% of the actual price of SoFi? Well, SoFi is trading at 22.40 and my put's at 22. So obviously that is close enough. It is protecting me. So all my puts are in place. Now I want to run the traditional wheel. I want to try to sell a covered call for at least 24, 25 cents at the 24.50 strike, and I want to do it in the next week coming up, this particular week, 4 days. Let's see what's available here. Looking at the calls, 24.50, I can only get 8 or 9 cents. So I cannot get enough to trade this, to sell this covered call. So what I'm going to do is I'm going to add to my position. I'm going to basically double down, and I'm going to sell a put. And I'm going to sell a put where? Well, wherever I can get 25 cents, 26 cents, and then I'll go back one if I'm still out of the money. So I'm going to sell the 22 put. And mid price is 43 cents. I'm going to do one of these because you do one for, and then for every $5,000 to $10,000, the sizing. If you have the Safe Wheel course, it'll tell you exactly how the sizing works. Okay, so I'm going to go in at 42 cents here. And I just got filled. So that's a good fill there. Collected 44, actually traded at 44, gave me a little better. So now I'm going to possibly own 200 shares next week. It's possible, but my hedge is right there. I've got 3 long puts right at the 22 strike. So I'm not worried if I get assigned because my hedge will protect me. In fact, I would love for SoFi to crash. I would make a lot more money if it did. Okay, so that is trading the PL5, the Safe Wheel. So let's talk about, see what there's people are talking about here. Let's check the comments. Neil said he was first, which he was. Sophia, how are you doing from Spain? 4:15 p.m. over there. It's 7:26 a.m. here. Neil, let me know that the sound is working, everything. Ascenti says he's second. Let's see. Will said, happy Groundhog Day. He saw his shadow. Okay, does that mean that winter is going to end early? I guess, I don't know. Oh, Avery says, I was hoping for an early spring, so yes, probably. Let's see. Moltel says, if I want to $100 stock price, how much maximum put price can I buy? Okay, so you're trying to size, and you want to trade a $100 stock. Now, I haven't back tested that. So I'm only dealing with stocks that reach up to a possibility of $50. So technically, you could do half of what I'm doing, but you need to back test it. If you're going to go outside of the sizing rules, you should back test the system yourself. That's what I recommend. Or just stay within the sizing rules, which is trading stocks between $20 and $40. Ascend has a Safe Wheel idea. To avoid assignment, when the short put is in the money, to avoid going into tier 2, we can close the position on Friday if the long put profits outweigh the wheel debit needed to close. So let's think about that. So if the long puts profits outweigh the debit, and yes, interesting. I would say that 9 times out of 10, the put hedge, the 3 long puts, is not going to outweigh the debit, but maybe it will. Maybe it will. That's not a bad idea, actually. That needs to be back tested. I kind of like that idea. But just back test it and let me know what you find out. Tim has a question. Can the Safe Wheel be done on ES futures? Well, yeah, I'm sure it can. It just needs to be sized properly. And then therefore, if you're going to size it differently, again, you need to back test it if you're going to go outside the sizing rules, because the Safe Wheel, the way I have it, is it's sized to the exact where it needs to be, and then it's back tested from there and forward tested, so I know it works well there. I haven't back tested a different size, and theoretically it should be able to size up, but because I haven't back tested it, I'm not going to vouch for that. Will says the safe whale put hedge is pretty strong. Yeah, it is. It's up $200 where I'm down $200 on the stock. So this would be close to be cashing in if I was long 200 shares right now. Andrew says, I thought we need to check if the put hedge is within 70% of the assignment price, not current stock price. Let's see. We need to check if it's 70% within. No, it has to do with the current stock price because I want to make sure that it protects me wherever that current stock price is. Because let's say the stock price goes to $45, I need to move this put hedge up because it's not protecting me significantly based on the actual price of the stock. Avery says, hit that like button. If you like that I am sharing my account, first of all, that I divided my accounts up so you know exactly how each system works because it's isolated to each account. And then from there, you can see the exact performance. And I show you my net liquidation every week, plus my equity curve every month. So you can know that I'm not adding money to the account. If you like that, please hit the like button because if you hit the like button, then that will help other people find these videos. And I think if an educator out there claims that he's making money or she's making money trading, and then they sell a course on top of that, they need to share their real equity curve and prove that they're not adding money to the account and prove that they're actually making money instead of making false claims. And if you hit the like button, it helps that cause. If you believe in that cause, hit the like button. Will says, I bought a $5 put instead of a $5 call this week. Risk graph always makes me nervous on this spot of the cycle. Yeah, that's interesting. And buying a $5 put might help. I'm more trying to protect this put hedge here, but that's why I buy the call, because this put hedge, if the stock goes up higher, let's say it goes to $30, this put's going to be worth very minimal. And therefore I kind of have a little hedge there to protect this hedge. So it's like a hedge for the hedge. That's why I go long with $5 call. But you bought a put because you were kind of looking at the risk graph and doing things based on that. And that's fine. You've been trading this for a long time, Will. You understand it totally. So yeah, if you want to go off the reservation, no problem. Oh, Avery says ES does not have earnings. Yeah, that's another factor. I like to have stocks that have earnings, because sometimes that kind of gets me a little bit out of that. I kind of get caught in no man's land a little bit, and earnings helps me get out of there. And some guy says he was first, which he was about 15th. Yeah, I think the shovel's not here, so he's got to do that. Some guy says, nice return on Hood. Robinhood on the earnings edge. Yep, the earnings edge is still chugging along, even though 2025, when I actually quadrupled the account, and in 2026 it keeps going. I mean, it's still doing just as well in 2026, so looking good. Gadsden did his first like. I appreciate that. Thank you, Gadsden. Thanks for the like. The biggest Jesus. Can you ballpark what your profit could have been on Hood if you would have held, which is now around $90 a share? I don't know. Did Hood go to $90? Once I kind of get out of things, I kind of forget about it. Okay, so Avery just private messaged me, and she kind of ran that number, and it would have been, I don't have it. It would have been 75%. Oh, some guy says 75%, which would have been, pretty good. 75% for me, probably around $5,000 instead of $1,000. So yeah, would have been nice to hold that one. Sophia, what P&L do you have with the 100 shares assigned? down $214. That's what I have on the 100 shares. See that? But I'm up about 220 on the hedge. So my hedge is covering me. But you can see that I'm down on the shares, 100 shares, about $213. Ascend says, is anyone holding the earnings edge trade on Hood? The price is 3 points below the lower edge now, which makes the profit 70% or so. Yeah, be interesting if anyone hold. Oh, some guy says he just closed it. So nice. So some guy, if you don't mind me asking, how much money did you actually make on that trade? That would be an interesting question to ask and an answer to have, but just close it. Good hold on that one. Yeah, I got out early, but that's okay. I'm okay because I made money, so I'm not worried about it. But yeah, the earnings edge is doing quite well. Sophia says, why didn't you close the put hedge the 100 shares assigned? So why didn't I close it? Because I have a plan that I could own 200 shares. I'm collecting more premium, and I can own 200 shares, or I can collect more premium. And I only want to be long 200 shares when I use my put hedge and cash it in, because I still have more premium to collect in this particular cycle. I'm always trying to collect premium. I'm not necessarily, interested in using my hedge and cashing in on my hedge. I'm more interested in collecting premium. So I'm collecting more premium. Collected another $44 today. All right. All right. So I don't see any other further questions or comments. So in parting, I like to say, if the P&L is not real, what else are they trying to conceal? I appreciate you guys, and I'll be back next week.